We know by now the House passed that one big, beautiful bill. It was an all-nighter, so it was early this morning. One of the issues for investors today as we approach the closing bell on Wall Street, 5 minutes away as we bring in Doug Flynn, co-founder of Flynn Zito Capital Management. How much cash do you have right now?
Not a lot. I want to get rid of the 0.9 cents at the gas station. Can we get rid of that?
That's stupid, right? Yeah, they used to. Well, it's amazing how quick cash went away. It was like that in Asia first, like China. Nobody had cash.
Yes.
Now it's like us. We've caught up. Anyway, this one big beautiful bill. We were talking about it earlier. Like Mitch Daniels was on, and he said, well, he's a Republican, of course. So there's just some stuff in here I like, but it is going to bust the debt and the deficits, no matter how you slice it. So, what does that mean for markets, bond market, stock market? What do you think, if anything?
Yeah. I mean, in the short run, it actually could be, positive for GDP and the market in the short run and for people. But in the long run, it's certainly going to add to the deficit. Although, when they do these calculations, as they did with the last Trump tax cut, the revenue actually went up. And so I don't know that they're including all of the offsets and things that may actually happen.
It's just an argument about how much growth. I was saying that to Governor Daniels. It's like, but their growth, because if the administration people come on, I think we have one on later in the show, we'll ask, but they're saying like 3-4% growth. I mean, last time we had 4% growth was the 90s, right? Like,
long
real,
time.
And it was a different economy. So it seems like it's going to be tough to get there, but we'll see. Let me talk about a few business issues while you're on today. Nike, because this fits into this conversation we've been having almost every time you're on who's raising prices, who's cutting prices. Nike raising prices. What do you say?
Yeah, the headline number was that it was raising it up to 7%. But, when you do the math on that, that is only on the $150 shoe. And it's 6.67%, so they round it to 7%. And if it's between $100 and $150, it's only $5, which is like 3 to 5%. And they're not raising it on items below $100 and not on children's items. So the headline was that they're raising their costs up to 7%. But the reality is it's far, far less than that. It doesn't take away from the fact that they've got a lot of competition. Their stock is down 20 or more percent. Their global sales are down 9%. They haven't been on Amazon. They're going to come back because they need to expand their revenue. They've had a lot of trouble with that company, and they need to do some things. And this is part of that. Maybe it's tariff related to some degree. Maybe it's not. They need to do a lot more than that to revive this company.
Okay, that's good perspective. That's not as bad as maybe you think. Are you one of those guys that wears like Jordans with a suit, or not real? That's not. No.
Not usually. No.
No. You got the shoes polished. All right. The last thing, housing. Okay, so we had housing numbers. Existing home sales dropped. We also we're going to flash up the 30-year mortgage rate in a moment as well. 6.86, which is the highest since mid-February. So, give us the sense of housing right now and where we're at.
Yeah, so the problem is that home sales did go down for April, and the median price is up 1.8%, and that's the 22nd consecutive month of year-over-year price increases. And so rates are back up close to 7% again, although a year ago today they were 6.94. So they came down, they came back up, so we're bumping up against where we were a year ago. But that is a big affordability problem, because if the prices are high and the rates are high, you're getting squeezed on the people's affordability. Now, there is more to choose from, so that's helping, but it doesn't look like any of this is changing soon, and Trump isn't going to get his lower rates, and it may not get it for even longer with the passing of this bill and all the other stuff that's going on. The economy is just hanging on a little too well for the lower rates, and so affordability isn't coming quite as quickly as we would like it to.
Yeah, it's an issue. So sometimes we're in these cycles where you kind of know the next move is going to be lower for rates, or in other cases higher. But now, to your point, we don't know, right? We're in a period of uncertainty, including with the interest rate outlook. So you got to tell people to make decisions, whatever's best for your family, and not worry about rates, right? Is that at this point, or how long is that going to go on for?
I mean, it can go on for a little while. I think you're going to bump around in a range a lot, and I think what it comes down to is short-term speculation in a house you can't do. If you find the house of your dreams you're going to stay in for 20 years, okay, you do that, and then you maybe look to refi at some point when you can. But all those people that were trying to buy something with the hope to flip it in 3 to 5 years, that's gone. It's too expensive. You can't afford to do that. You have no assurances that it's going to continue to go the way it is.
All right, Doug. As always, thanks for so much time. Enjoy the Memorial Day weekend. Thanks for coming on today. Doug Flynn.
You too.